welcome back to Cambridge House Live. I'm Vanessa Collette here at the Cantech Investment Conference, Toronto. And I'm thrilled to be joined by Mike Wekerle. He is the CEO and founder of Difference Capital. Welcome, Mike. Great to have you here.
Thank you so much for having me here.
Yeah, absolutely. So, Mike, what are you excited about these days?
You know, I've been very clear in the last 5 years. I kind of transitioned myself out of the cyclical market and refocused since I did that in 1995 with bringing Blackberry public and doing a lot of work with Descartes and a lot of great companies of the day, is I see the return primarily on a global basis of technology. We're now going to an environment where the thematic tone is about the cloud, it's about wireless, it's about SaaS, it's about recurring revenues, it's about looking at commerce in a different way where commerce is now interactive, it's more online, second screen.
Yeah, customers are more empowered than ever before.
Something faster, cheaper, and easier to use, make it more accessible. You know, my mom is 83. I'm taking her to Europe tomorrow with all my children, her grandchildren, and my sisters. And I'm excited, but the cool thing is she spends a lot of her time on the internet because of social media and Facebook to see the children.
Right, absolutely. Yeah, it's changed all of our lives in a big way. Now, you created Difference Capital initially to channel some of the money that you saw leaving the resource markets into tech. So what made you see the transition happening?
Well, I think everything's a cycle. You know, I've always historically gone on a 10-year basis cycle, but what I do believe is that what you have to look at is what is coming out. We didn't have an iPad till 7 years ago. So when you see something that is transformation of something of that significance, and you know, the best thing to understand where life's going is look where it was and see the youth of today that empowers that innovation and take it forward.
Right, absolutely. Now, do you think there's still a lot of money waiting in the 100%. Resource sector about to come into tech?
You haven't seen nothing yet.
Now, you've had some growing pains, I think, with Difference Capital in the past 2 years. What have you done to right the ship?
Well, you know, as I said everyone from the beginning, and I'm the largest investor in Difference Capital. It's a merchant bank. It's 5 years to build a business, 10 years to build a brand. We attempted at first to create a business that would offer advisory and investing, but what we realized, and Tom Astle and Tom Liston were fantastic at steering the ship here, we had to make some changes on the management side. Henry Knight has taken over the CEO role, and I'm more of the ambassador, the chairman. But what I do know is the fact that, you know, it's difficult to work on behalf of a company as an advisor and an investor. It creates too many conflicts. So we've changed our views in the sense of how we look at companies, and really where it's on the behalf of the shareholders. And you know, internally, I think that we've right-sized the company, we've right-sized the investments. We had too many investments at 40. We're now approximately 28, going on our way to 20. And we have the right staff to do that. We have some excellent people that I've worked with for 20 years. You know, I've raised more money in Canada than anyone in this Canada. I'm not trying to toot my own horn, but you know, coming from the environment of First Marathon and GMP Securities, we were a small and mid cap. You know, I'm not a bank financier, so in my world, it's all small and mid cap, which is the growth. You hope to get a winner, which you can carry it through, which is what I did.
Now, what do you say to people who say that the tech sector is becoming overvalued?
I say bon chance. You know, we always need a difference of opinion. And you get buyers and sellers, and at the end of the day, that's what makes a market. At the end of the day, you know, all we have is our own ability to make a decision. It's the one thing in life we control. And that's what makes a market. Now, what I do like about people that say that is that I know I'm not anywhere close to the end, is when you get in a taxi cab and starts giving me stock advice, then I know I'm in trouble.
Right, well, I was going to ask, you know, what signs do you look for to tell you that there's going to be kind of a top in or a bubble?
There's some great things to look at. You know, first and foremost, you look at insider buying and insider selling. You look at the IPO market, how many things have come public. It's flow of funds, and flow of funds are predominantly about, you know, how's the index. In 1999, the tech index was over 52%, and the mining index, or the resource index, was under 20%, and the gold index, by its own accords, were less than 2%.
Right.
That, you know, 5-6 years ago had completely reversed itself. It's changing now much. But when I saw the 2010 market of the resource sector, including oil and gas, that was over 60%, and mining was 22%. I realized at that point in time, with tech under 2%, that, man, we lost Nortel, we lost a lot of great companies, which is sad for Canada, but what an opportunity for an investor. And you have to look at, when people leave, I buy fear, when people get in, I sell greed.
Right. Now, what do you think the next big thing is going to be in tech?
Well, it could be you. But but at the end of the day, what I do believe in tech, as I said, is having a theme. It's about wireless second screen TV. It's about interaction, it's about commerce, it's about the cloud, it's about data storage, and big data is something that's really killer, or really cool, I should say. And the one thing that I really think from a humanity point of view, I'm really looking forward to digital health and how that streamlines the hospital industry, where waiting lines become less, you can check out when the waiting line is there. Innovation in the sense that make it more efficient, less costly for the government, which ultimately is less costly for the average Canadian through taxes.
Now you took Blackberry public, you took RIM public, and was it 1998?
Yeah, we did the pre-public in 1995 at a valuation of about $100 million, and we did a $35 million pre-money value. And then roughly a year later, it went public, and the market cap was significantly higher, and it rose to, I think, $200 billion. Absolutely not. But, you know, I love what John Chen's doing.
Yeah.
You know, this new passport is absolutely incredible. I have both the passport and the classic. If you look at this with the screen, you know, 30 hours of battery life, you know,
amazing.
I use it, why don't you? But it's an incredible device, and it has something with an interactive, the dynamic of the cut and paste model, the interaction that you have with as a screen. My children use this as a TV screen.
Right. Yeah, it's quite a big
That's the difference
screen.
today.
What do you think of the rumors that Samsung might acquire RIM?
I hope they don't. There's no reason they should buy it. They're a little late, you know, and I think that the investors should look at this and say, you know, this is a sign when Samsung comes in and says, I want to buy RIM. Hello, I think it's over.
Right.
This is the first day of that happening, you know.
Why do you think we haven't seen anything as big come out
I would buy Blackberry
Canada?
tomorrow as much as you can, and I will stake. I wear 3 underwear if this doesn't happen at a higher price than you did.
You heard it here first. You see a lot of entrepreneurial spirit on Dragon's Den. What do you think of Canadian entrepreneurs?
I think it's great. I think it's a multicultural group. I think that we have a diverse intellectual group. We have a diverse religious group, we have a diverse nationality group, and I think ethnic group. I think one of the key things here that Canada has done extremely well over the past 25 years is build institutions for education that has now made us the top computer science provider of engineers in the world, I believe.
Right.
We produce out of the Waterloo, Kitchener, Guelph region more computer engineers than the whole state of California.
Wow, that's amazing. Yeah, that's quite the stat. Now, how well suited, based on that, how well suited is Canada to compete with the U.S.?
Again, we're 1/10 the size of the population. It depends on where we're competing. If we're competing on intellectual capital, we're very much there. If we're competing on merchandising and population, we're not there because we have a long way to go here with 37 million people compared to 400 million people.
So what does Canada need to do to compete more?
I think that has become more of a inclusive society. We have too much regulation, too much difficulty in politics, too much barriers, and we have to deploy capital in the hands that mean a lot to the investors and mean a lot to the children who are going to grow up. Rather than give money to companies as incentive, create infrastructure, create rapid rail. Look what China's doing, you know, light rail transit. Create an environment where you can get there faster and make it accessible. Someone who's sitting in Sudbury might be perfectly suited to be working in Kitchener, but they can't get there. So make it open and create that infrastructure for humanity and all Canadians to have the ability to work in either the metropolis or to work in an isolated tech center.
Now, what could be done to make raising money easier?
If we all knew that, we wouldn't be here. There's no real thing.
I mean, is crowdfunding going to play a big part?
Crowdfunding will play its role, but again, everything gets abused. What about raising money is about making people money. We have to create a sustainable tax regime, a sustainable environment where there's respectful employment, and we have the ability to have checks and balances that create a longevity, and longevity is the key to creating good business.
Now, you've raised a lot of capital in your history. So, what advice do you have for entrepreneurs out there who are trying to raise capital?
Never be underfinanced. You know, you can't be too smart or too tough. Oftentimes, people think that they're the best. Well, we all do, but I think that sometimes having a small piece of a big pie is better than having a big piece of a small pie. You know, if you increase zero by 1,000%, it's still zero.
So you're saying take the money while you have it, take as much as you can?
You can't, not as much as you can, but have a balance. Often you take too little, you find yourself in a funding gap, and sometimes leave a little bit on the table for the next guy. It's a good human way to be.
Excellent. Well, Mike, it was a pleasure having you on the show today. Thank you so much for joining us.
I love you, Jackie. You look great today.
Thank you, Mike.